Question 1. Which of the following is NOT typically covered under commercial general liability CGL policy? A. Personal and advertising injury liability. B. Workers' compensation liability. C. Bodily injury and property damage liability. D. Medical payments. Answer: B. Workers' compensation liability. Explanation: Workers' compensation liability is specifically excluded from a standard commercial general liability CGL policy. CGL policies typically cover bodily injury and property damage liability coverage A, personal and advertising injury liability coverage B, and medical payments coverage C. Workers' compensation coverage is provided under a separate policy as it involves distinct legal and statutory requirements. According to the Florida Insurance Code, businesses must have separate workers' compensation insurance to comply with state regulations. Question 2, scenario-based. David runs a small landscaping company in Florida. One of his employees, Mark, was injured on the job while using a lawnmower. David is unsure whether the injury is covered under his current insurance policy or if he needs to take additional steps. Mark was performing his usual job duties when the accident occurred, and he now has medical bills and lost wages. Which type of insurance should David rely on to cover Mark's medical expenses and lost wages? A. Commercial general liability CGL policy. B. Florida workers' compensation insurance. C. Umbrella liability insurance. D. Business auto policy. Answer: B. Florida workers' compensation insurance. Explanation: In Florida, employers are required to provide workers' compensation insurance for employees injured in the course of employment. Workers' compensation insurance covers medical expenses, lost wages, and rehabilitation for employees hurt while performing their job duties. The commercial general liability CGL policy would not cover workplace injuries to employees. Umbrella liability insurance extends coverage beyond the limits of underlying liability policies, but does not replace workers' compensation coverage. Florida Statutes Chapter 440 outlines the legal requirements for workers' compensation coverage, making this the appropriate insurance for David to rely on. Question 3. Under Florida's personal injury protection (PIP) laws, what is the minimum percentage of medical costs that must be covered for an individual injured in an auto accident, regardless of fault? A. 60%. B. 80%. C. 100%. D. 50%. Answer: B. 80%. Explanation: Under Florida's no-fault law, personal injury protection (PIP) coverage must cover at least 80% of the insured's medical costs arising from an auto accident, regardless of fault. The coverage applies to medical treatments, hospital expenses, and related medical services. PIP is mandatory in Florida, with a minimum required coverage of $10,000 for medical and disability benefits, as defined by Florida Statute Section 627.736. The remaining costs may be covered by health insurance or out-of-pocket. Florida's no-fault insurance system is designed to ensure timely payment for medical expenses while limiting the need for litigation over minor injuries. Question 4. Which of the following describes a situation where vicarious liability might apply in Florida casualty insurance? A. An employee injures a pedestrian while driving their personal car during a lunch break. B. A business owner is held responsible for an employee causing injury while performing job duties. C. A homeowner is sued for injuries caused by a neighbor's child on their property. D. A contractor is held responsible for a customer's injury from faulty installation performed by a subcontractor. Answer: B. A business owner is held responsible for an employee causing injury while performing job duties. Explanation: Vicarious liability occurs when one party is held liable for the actions of another. In Florida, employers can be held vicariously liable for their employees' negligent actions performed within the scope of employment. This is governed by the Respondit Superior Doctrine, which places responsibility on employers for the acts of employees acting in the course of their employment. Option A would not apply because the employee was on a lunch break, which might not be considered within the scope of employment. Option C refers to premises liability, and Option D involves independent contractor liability, which differs from vicarious liability. Question 5. In a Florida personal auto policy (PAP), what does the financial responsibility law primarily enforce? A. The requirement to have physical damage coverage for all vehicles. B. The need for property damage liability to cover damage to others' property. C. The mandate for uninsured and underinsured motorist coverage. D. The requirement to have minimum bodily injury liability in case of an accident involving serious injury or death. Answer: D. The requirement to have minimum bodily injury liability in case of an accident involving serious injury or death. Explanation. Under Florida's financial responsibility law, individuals must have bodily injury liability coverage when they are at fault in an accident that results in serious injury or death. If involved in such an accident, they must be able to provide proof of financial responsibility, which generally means holding insurance with minimum liability limits. This is separate from the mandatory PIP, personal injury protection, and property damage liability (PDL) coverages required by Florida's no-fault law. Question 6. Scenario-based. Anna, a Florida resident, is driving her friend's car and causes an accident that results in $35,000 in property damage to another vehicle. Anna has her own auto insurance policy with $25,000 in property damage liability (PDL) coverage, but her friend's policy provides $50,000 in PDL. How will the insurance cover the damages? A. Anna's policy will cover the full $35,000. B. Anna's policy will contribute $25,000 and her friend's policy will cover the remaining $10,000. C. Her friend's policy will cover the full $35,000. D. Anna's policy will cover $10,000 and her friend's policy will cover $25,000. Answer. B. Anna's policy will contribute $25,000 and her friend's policy will cover the remaining $10,000. Explanation. When a driver is using a borrowed vehicle, the primary insurance on the vehicle, the owner's policy typically provides the first layer of liability coverage. However, if the damages exceed the limits of the driver's policy, the vehicle owner's insurance can cover the remaining amount. In this case, Anna's $25,000 PDL policy is exhausted first, and her friend's policy covers the remaining $10,000 in damages as the total exceeds Anna's coverage limit, but is within the limit of her friend's insurance. Florida law mandates that all drivers must carry minimum PDL to ensure coverage in such situations. Question 7. In Florida, under the commercial auto policy, which of the following best describes the coverage provided by the hired and non-owned auto liability endorsement? A. Coverage for employees using their personal vehicles for company business. B. Coverage for damage to company-owned vehicles. C. Coverage for rental vehicles used by the company for business purposes. D. Coverage for any vehicle operated by the insured business at any time. Answer. A. Coverage for employees using their personal vehicles for company business. Explanation. The hired and non-owned auto liability endorsement under a commercial auto policy in Florida provides liability coverage when employees use their personal vehicles or rented vehicles for company business. This coverage is crucial for businesses that do not own vehicles but require employees to drive personal cars or rented vehicles for work purposes. It does not cover physical damage to the vehicle itself, which would require separate coverage. Option B refers to physical damage coverage for owned vehicles, and Option C refers specifically to rented vehicles under hired auto coverage, while Option D is too broad to accurately describe this endorsement. Question 8. Which of the following is the primary function of umbrella liability insurance in Florida? A. It acts as a standalone policy that provides coverage for risks not covered under primary policies. B. It provides additional liability coverage above the limits of underlying policies. C. It covers physical damage to property owned by the insured. D. It acts as the first line of defense in the event of a liability claim. Answer. B. It provides additional liability coverage above the limits of underlying policies. Explanation. Umbrella liability insurance serves to provide excess coverage over and above the limits of the insured's primary liability policies, such as auto or homeowners insurance. In Florida, this type of insurance offers protection against large claims that exceed the limits of these underlying policies. It does not cover physical damage to the insured's own property that would be covered by property insurance, nor does it act as the primary form of insurance. Instead, it kicks in only when the limits of the underlying policies are exhausted. Question 9. Under Florida's no-fault law, when can a person injured in a car accident step outside the no-fault system and file a lawsuit for damages? A. When their medical bills exceed $2,000. B. When the accident was caused by an uninsured driver. C. When the injuries meet the threshold for serious injury as defined by law. D. When the injured party was not at fault in the accident. Answer. C. When the injuries meet the threshold for serious injury as defined by law. Explanation. Florida's no-fault law requires drivers to carry personal injury protection (PIP) coverage, which limits the ability to sue for injuries. However, an injured party may step outside the no-fault system and file a lawsuit if they suffer serious injuries which are defined under Florida law as permanent injury, significant scarring, disfigurement, or death. This threshold must be met to pursue additional compensation through litigation. The no-fault system is intended to simplify the process of receiving compensation for medical expenses and lost wages, regardless of fault, but serious injuries allow for legal recourse beyond PIP benefits. Question 10, scenario-based. John, a business owner in Florida, purchases a commercial general liability CGL policy to protect his business. A customer slips and falls inside his store, resulting in a lawsuit for $50,000 in medical expenses. John's policy includes a per-occurrence limit of $30,000 and an aggregate limit of $100,000. How much will John's insurance pay for this claim? A. $50,000. B. $30,000. C. $20,000. D. $100,000. Answer: B. $30,000. Explanation: John's commercial general liability CGL policy includes a per-occurrence limit of $30,000, which means that the insurance company will pay up to $30,000 for any single incident or claim. Even though the lawsuit seeks $50,000, the insurer is only obligated to pay up to the per-occurrence limit. The remaining $20,000 would need to be covered by John personally. The aggregate limit of $100,000 refers to the total amount the insurer will pay for all claims during the policy period, but does not affect the limit for individual occurrences. Florida insurance regulations stipulate that the per-occurrence limit is the maximum payout for individual incidents. Question 11. In Florida, which of the following is true regarding personal injury protection? PIP under the no-fault law. A. PIP covers 100% of medical expenses up to $10,000. B. PIP only covers injuries if the policyholder is at fault. C. PIP covers 80% of reasonable medical expenses and 60% of lost wages. D. PIP applies only if the accident occurs within 50 miles of the policyholder's residence. Answer: C. PIP covers 80% of reasonable medical expenses and 60% of lost wages. Explanation: under Florida's no-fault law, personal injury protection (PIP) covers 80% of reasonable and necessary medical expenses and 60% of lost wages up to the policy limit of $10,000, regardless of fault. PIP applies to injuries sustained in an accident, regardless of where the accident occurs within the state, and helps to ensure that injured parties can receive immediate medical care and lost wages. Question 12. Which of the following perils is typically covered under a standard Florida homeowners insurance policy? A. Earthquakes. B. Floods. C. Fire. D. Sinkholes. Answer: C. Fire. Explanation: a standard Florida homeowners insurance policy covers fire as well as other common perils like windstorm, lightning, and theft. Floods are typically excluded and require separate coverage through the National Flood Insurance Program (NFIP) or a private insurer. Earthquakes and sinkholes may require additional endorsements or policies for coverage. Florida homeowners, in particular, should be aware of exclusions for flood and sinkhole coverage due to the state's unique geographic risks. Question 13. In Florida, what does the term windstorm refer to in property insurance policies? A. Any wind-related event, including hurricanes, tornadoes, and thunderstorms. B. Only hurricanes with winds exceeding 74 miles per hour. C. Tornadoes and thunderstorms, but not hurricanes. D. High winds during thunderstorms that result in hail damage. Answer A. Any wind-related event, including hurricanes, tornadoes, and thunderstorms. Explanation: windstorm in Florida property insurance policies refers to damage caused by any wind-related event, including hurricanes, tornadoes, and thunderstorms. Florida property insurance policies often have separate windstorm deductibles, particularly due to the state's vulnerability to hurricanes. Windstorm damage is typically covered under standard homeowners policies, but policyholders need to review specific windstorm provisions and deductibles that apply to their area. Question 14. Which of the following types of liability is covered under the Comprehensive General Liability (EDL) policy commonly purchased by businesses in Florida? A. Product liability. B. Auto liability. C. Workers' compensation. D. Professional malpractice. Answer A. Product liability. Explanation: A comprehensive general liability (CGL) policy typically covers businesses for third-party claims related to bodily injury, property damage, and product liability. It protects against claims that arise from products sold or distributed by the business. However, auto liability, workers' compensation, and professional malpractice require separate coverages, such as a commercial auto policy, workers' compensation insurance, and professional liability insurance, respectively. Florida businesses should ensure they have adequate coverage for their specific risks. Question 15, scenario-based. Lily owns a rental property in Florida. During a storm, a tree falls and damages the roof of the property, causing water damage to the interior. Lily's homeowner's policy has a $1,000 deductible, and her insurance company estimates the damage at $15,000. How much will the insurance company pay after applying the deductible? A. $15,000. B. $14,000. C. $1,000. D. $13,000. Answer: B. $14,000. Explanation: after applying the $1,000 deductible to the estimated $15,000 damage, the insurance company will pay $14,000. The deductible is the amount Lily is responsible for paying before the insurance coverage kicks in. Deductibles apply to covered perils under her homeowner's policy, and in this case, windstorm and water damage as a result of the roof damage are covered. Florida policies typically have windstorm deductibles, especially in hurricane-prone areas. Question 16. In Florida, how long must an insurer give notice before cancelling a property insurance policy due to non-payment of premiums? A. 10 days. B. 30 days. C. 45 days. D. 60 days. Answer: A. 10 days. Explanation: Florida law requires insurers to give at least 10 days notice before cancelling a property insurance policy for non-payment of premiums. However, for other reasons such as non-renewal or policy changes, the notice period can be 45 days. The state's regulations ensure that policyholders have sufficient time to address issues like missed payments before their coverage lapses, which is critical in a state vulnerable to natural disasters. Question 17. What is the purpose of Florida's Citizens Property Insurance Corporation? A. To provide mandatory insurance for high-risk properties. B. To offer coverage for citizens who cannot find insurance in the private market. C. To regulate insurance premiums across the state. D. To handle insurance claims after a disaster. Answer: B. To offer coverage for citizens who cannot find insurance in the private market. Explanation: Citizens Property Insurance Corporation is a state-run insurer created to provide insurance coverage for Floridians who are unable to secure coverage through the private insurance market, often due to living in high-risk areas prone to hurricanes or other natural disasters. It serves as a last resort insurer, ensuring that all property owners in the state can obtain necessary insurance, but typically charges higher premiums due to the elevated risk. Question 18. Under Florida law, when must an insurance company provide a wind mitigation discount on homeowners' policies? A. Only if the home is new construction. B. If the home meets certain construction standards designed to reduce windstorm damage. C. When the home is located within 10 miles of the coast. D. For homes built before 2000. Answer: B. If the home meets certain construction standards designed to reduce windstorm damage. Explanation: Florida law requires insurers to offer wind mitigation discounts on homeowners' policies if the property owner can demonstrate that the home meets certain construction standards that reduce windstorm damage. These may include features like impact-resistant windows, hurricane shutters, and reinforced roofing. Wind mitigation inspections are often required to qualify for these discounts, which are essential in a state where windstorm risk is high. Question 19, scenario-based. Maria is involved in a car accident in Florida where she was at fault. The accident results in $10,000 in medical expenses for the other driver. Maria's personal injury protection, PIP, covers her own medical expenses. Which coverage will apply to the other driver's expenses? A. Maria's PIP. B. The other driver's PIP. C. Maria's bodily injury liability coverage. D. Maria's property damage liability. Answer: C. Maria's bodily injury liability coverage. Explanation: since Maria was at fault in the accident, her bodily injury liability by coverage would apply to cover the medical expenses of the other driver up to the policy limits. While PIP covers Maria's own injuries, it does not cover the other driver's medical expenses. A bodily injury liability is optional in Florida, but if carried, it protects against claims for injuries to others caused by the insured's negligence. Question 20. In Florida, which of the following is covered under a standard commercial property insurance policy? A. Business interruption. B. Employees' personal belongings. C. Automobiles owned by the business. D. Customer property stored at the business. Answer A. Business interruption. Explanation. A standard commercial property insurance policy typically covers business interruption, which compensates the insured for lost income and operating expenses during the period when the business is unable to operate due to a covered loss, such as a fire or storm. It does not cover employees' personal belongings or customer property unless specifically endorsed. Automobiles owned by the business are covered under a separate commercial auto policy. Question 21. What is the primary purpose of Florida's Windstorm Underwriting Association? A. To provide coverage for homes in high-risk flood zones. B. To offer insurance for homeowners in areas at high risk for windstorms. C. To regulate windstorm coverage across Florida. D. To ensure fair premium rates for windstorm coverage. Answer. B. To offer insurance for homeowners in areas at high risk for windstorms. Explanation. The Windstorm Underwriting Association was established to provide insurance coverage for homeowners who live in areas with a high risk of windstorms and who cannot obtain coverage through the private market. It is intended as a safety net for those in areas susceptible to hurricanes and tropical storms, offering necessary windstorm coverage to homeowners. Question 22. In Florida, what is the maximum time allowed for a homeowner to file a claim after hurricane damage occurs? A. 60 days. B. 6 months. C. 1 year. D. 3 years. Answer. D. 3 years. Explanation. Under Florida law, homeowners have up to 3 years from the date a hurricane makes landfall to file an insurance claim for damage related to the hurricane. This extended time frame allows homeowners to assess all potential damages and ensures they have sufficient time to report the loss. For other types of property damage, the time limit is usually shorter. Question 23. What is required of Florida homeowners in order to qualify for a premium discount related to wind mitigation? A. Home must be located within a hurricane evacuation zone. B. Home must be inspected and meet specific building standards. C. Home must be less than 10 years old. D. Home must be owned outright, no mortgage. Answer. B. Home must be inspected and meet specific building standards. Explanation. To qualify for a wind mitigation discount in Florida, homeowners must have their home inspected and meet certain building standards designed to reduce windstorm damage, such as hurricane shutters, impact-resistant windows, or reinforced roofing materials. These features are intended to lower the risk of damage from high winds, resulting in premium discounts. Question 24. Under Florida's no-fault law, what is the minimum amount of personal injury protection (PIP) coverage required? A. $5,000. B. $10,000. C. $25,000. D. $50,000. Answer. B. $10,000. Explanation. Florida's no-fault law requires all drivers to carry a minimum of $10,000 in personal injury protection (PIP) coverage. This insurance pays for medical expenses, lost wages, and other costs regardless of who is at fault in an accident. It ensures that drivers can cover their own medical expenses up to the policy limit in the event of an injury. Question 25. Which type of coverage would protect a Florida homeowner from losses related to rising floodwaters? A. Windstorm insurance. B. Homeowners insurance. C. Flood insurance. D. Earthquake insurance. Answer. C. Flood insurance. Explanation. Standard homeowners insurance policies in Florida do not cover losses caused by flooding. Homeowners in areas prone to flooding, such as near the coast, must purchase separate flood insurance to protect against damage caused by rising water. Flood insurance is often provided through the National Flood Insurance Program and FIP, or private insurers. Question 26. What is the main difference between replacement cost coverage and actual cash value? A. Coverage in a Florida homeowners insurance policy. A. Replacement cost provides coverage based on current market value, while a CV considers depreciation. B. A CV provides coverage for rebuilding a home, while replacement cost pays for temporary housing. C. Replacement cost is for personal property, while a CV is for the structure of the home. D. Replacement cost provides coverage for all risks, while a CV excludes certain perils. Answer. A. Replacement cost provides coverage based on current market value, while a CV considers depreciation. Explanation: replacement cost coverage pays for the cost to replace damaged or destroyed property at today's prices without accounting for depreciation, while actual cash value (SCV) coverage takes depreciation into account. For example, with ACV, the payout will reflect the depreciated value of the property, while replacement cost provides enough to replace or repair the damaged property. Question 27. In Florida, what is a common exclusion in a standard homeowner's insurance policy? A. Fire damage. B. Theft of personal belongings. C. Water damage from burst pipes. D. Flood damage. Answer: D. Flood damage. Explanation: flood damage is commonly excluded from standard homeowners insurance policies in Florida. Homeowners who live in flood-prone areas must purchase separate flood insurance through the National Flood Insurance Program and FIP, or from private insurers to cover losses caused by rising water. Fire, theft, and water damage from burst pipes are typically covered under a standard policy. Question 28. What is the purpose of the Florida Hurricane Catastrophe Fund (SHAF)? A. To help pay for individual homeowner claims after a hurricane. B. To provide low-interest loans to homeowners affected by hurricanes. C. To help stabilize the property insurance market by reimbursing insurers after a hurricane. D. To provide grants for rebuilding hurricane-damaged homes. Answer: C. To help stabilize the property insurance market by reimbursing insurers after a hurricane. Explanation: the Florida Hurricane Catastrophe Fund (SHAF) was established to help stabilize the state's property insurance market by providing reimbursement to insurers for a portion of their losses due to hurricanes. This reduces the financial burden on insurance companies and helps keep premiums affordable for homeowners. The FHCF does not directly pay claims to homeowners. Question 29. Which of the following is a benefit of purchasing ordinance or law coverage for Florida homeowners? A. Coverage for the replacement cost of a home after a hurricane. B. Reimbursement for the cost of meeting updated building codes when rebuilding. C. Increased liability protection for guests injured on the property. D. Lower premiums for homes with wind mitigation features. Answer: B. Reimbursement for the cost of meeting updated building codes when rebuilding. Explanation: ordinance or law coverage helps cover the additional cost of rebuilding a home to meet updated building codes after a covered loss. This is particularly important in Florida, where building codes have been updated to increase protection against hurricanes and other natural disasters. Standard homeowners insurance policies do not cover these additional costs unless ordinance or law coverage is added. Question 30. Under Florida law, how often must insurers offer to renew homeowners insurance policies? A. Annually. B. Every 6 months. C. Every 2 years. D. At the policyholder's request. Answer: A. Annually. Explanation: in Florida, insurance companies are required to offer homeowners the opportunity to renew their insurance policies annually, unless the insurer provides proper notice of cancellation or non-renewal. Policyholders can also choose to switch insurers at renewal time, and they are encouraged to review their coverage and premiums regularly to ensure they meet their needs.